Let me hit you with a question real quick. What if your money could make more money without you lifting a finger, answering a Zoom call, or flipping NFTs at 2 a.m.? Sounds like a scam? Nope. It's called dividend investing, aka getting paid just for owning stocks. It's like turning your savings into a tiny army of dollar soldiers working overtime while you sleep. If you're new to this whole money-making money thing, don't worry, I got you. This is your ultimate no-fluff guide to dividend investing for beginners in 2025. Whether you're just curious or you've been lurking on Reddit wondering what drip means, spoiler, it's not just your outfit. This video is for you. We're going to break this down into 10 easy-to-digest steps, and I promise, by the end, you'll feel a whole lot less confused and a whole lot more in control of your financial future. 1. What is dividend investing, and why should you care? Dividend investing is simple. You buy a stock, that stock makes money. The company says, "Thanks, fam," and pays you part of that money just for holding their stock. It's basically corporate appreciation in cash form. Now, not all stocks do this. Dividend stocks are like the grown-ups in the room, stable, responsible, and handing out allowance every quarter. Think Coca-Cola or Johnson & Johnson. Growth stocks, on the other hand, are like teenagers. They don't give you anything now, but they might grow into something amazing, like Tesla or Amazon. But here's the twist. Some stocks are both responsible and exciting, like Microsoft or Visa. They give you dividends and their stock price grows over time. 2. Why do companies even pay dividends? Great question. Companies pay dividends for the same reason your grandma sends you birthday money, because they can, and they want you to keep liking them. It's a sign that the business is mature, stable, and not trying to spend every dollar on wild new ventures. Plus, dividends attract a certain kind of investor. Think retirees or anyone who likes consistent income, aka all of us during a recession. It also builds trust and loyalty, since companies that consistently pay or increase dividends are saying, "We're doing great, and we want you to profit too." 3. Why dividend investing still works in 2025. You've probably heard the hate. Dividend investing is boring. Growth stocks are where it's at. That's recency bias talking. Yes, tech stocks crushed it for a while. But if you looked at the market from 2000 to 2012, basically nothing happened. Zero returns. Wouldn't it have been nice to at least collect some income during that time? Dividend stocks give you real cash flow, income you can spend or reinvest, no matter what the market's doing. And in a time of inflation, rising rates, and financial chaos, reliable cash beats guessing games any day. Key dividend terms. Every beginner must know. Let's learn the lingo so you don't sound like a lost tourist in the land of finance. Dividend yield, the percent return you get annually. Example, $4 dividend on a $100 stock, I'll be 4% yield. But heads up, it changes with stock price. If that stock drops to $80, yield becomes 5%, even though the $4 dividend stayed the same. Payout ratio, how much of a company's profits they're sharing. A 50% payout ratio? Cool. 120%? Red flag. That means they're paying more than they make. Free cash flow, the actual money left after expenses. Forget net income. That's accountant fantasy land. Dividends come from cold, hard cash flow. Dividend CAGR, compound annual growth rate. How fast the dividend is growing. If your paycheck grew 10% every year, you'd be thrilled, right? Same concept here. Dividend history. Has the company consistently paid or raised dividends? Look for those sweet 10+ year streaks, aka dividend aristocrats. 5. How much money do you need to start? Not a ton. Thanks to fractional shares and zero commission trading, you can start with as little as $10. Seriously, the key is consistency, not size. Even small amounts snowball into serious cash if you reinvest and stay patient. Think, planting seeds, not buying a forest. If your broker doesn't offer fractional shares in 2025, I'm sorry, are they still using floppy disks too? 6. Best dividend stocks and ETFs for beginners. Start with blue chip stocks or dividend-focused ETFs that do the heavy lifting for you. Good individual stocks. Coca-Cola, KO. Warren Buffett's Ride or Die. Procter & Gamble, PG, owns half your bathroom shelf. Johnson & Johnson, J&J, healthcare royalty. Prefer ETFs? Smart move. SCHD, top-tier dividend ETF with solid fundamentals. VYM, high-yield exposure to big U.S. companies. GRO, focused on consistent dividend growers. ETFs offer instant diversification and less drama than tracking earnings reports for 15 companies. 7. How to grow your dividend income, aka build your snowball. 3 simple ways. DRIP, dividend reinvestment plan. Automatically reinvest your dividends to buy more shares. It's compounding on autopilot. Own companies that increase dividends. It's like getting a raise every year for doing nothing. Invest more. The most powerful lever early on. $1,000 invested at 4% equal $40 a year. Add another $1,000. Now it's $80. Boom. 8. Common mistakes to avoid chasing high yields. That juicy 12% yield? Probably a trap. Look up AGNC or PSEC if you want nightmares. Ignoring payout ratios. Always check if a company can actually afford what they're paying. Lack of diversification. Don't bet the farm on 2 stocks. ETFs exist for a reason. 9. Set goals that motivate you, not crush you. Start small. Maybe aim for $10 per month in dividends, then $25, then $100. Use the 4% rule to estimate. $30,000 invested equal $200 per year equal $100 per month. $150,000 equal $500 per month. $300,000 equal $1,000 per month. It's not instant, but consistent investing and reinvestment will take you there faster than you think. 10. My personal dividend journey. I started back in July 2020 with some spare change and a dream. Fast forward to 2025, and my portfolio is now worth over $110,000 and pays me $200 per month. Not bad for passive income I barely have to think about. But I'll keep it real. Those early days, I was cashing dividend checks for like 23 cents. No lie, but I stuck with it. Now my dividends are stacking and compounding like crazy, and yours can too. So, where are you on your dividend journey? Drop a comment below. I love seeing people take their first step. If you found this helpful, smash that like button, hit subscribe, and I'll catch you in the next one. Until then, keep stacking that passive income. Peace.